What does a $1 trillion milestone at SK Hynix tell you about the next leg of the AI trade? And how could it reshape how you look at chip stocks right now? AI spending is redrawing the semiconductor map. For years, memory makers rode brutal cycles with thin pricing power. Today, high-bandwidth memory sits at the center of AI compute, and that changes the rules. SK Hynix reached a $1 trillion valuation because the market now treats premium memory as critical infrastructure, not a commodity. Here's the shift. Leadership in HBM turned into leverage. SK Hynix commands a majority of shipments in leading-edge HBM for AI accelerators, and that brings control over allocation and contracts that DRAM vendors rarely had. Demand also deepened. AI servers moved from pilots to multi-year roadmaps, so buyers are locking in capacity and content per server is rising. Pricing flipped. After a long slump, advanced DRAM and HBM contract prices climbed at double-digit rates year over year, and the industry stayed disciplined. Peers kept wafer capacity tight and prioritized HBM conversions, keeping supply and demand in balance. A few signposts explain the rally. A $1 trillion market cap shows how far investors repriced AI-linked memory away from old cyclical norms. HBM units are set to more than double in 2024 as each accelerator needs multiple premium stacks. The stock has jumped well over 50% in a year as HBM3 and HBM3E orders tightened the chain. Why it matters is simple. AI servers funnel more value to memory vendors because each compute chip needs more high-end memory. Converting standard DRAM lines to HBM also restricts conventional supply, lifting average selling prices and margins. For equity investors, that points to a re-rating. Leading HBM suppliers may deserve higher multiples while supply stays constrained and roadmaps stay firm. It also nudges sector flows. Gains in AI memory can outpace broader chip indices when compute demand accelerates. But keep your risk lens on. Macro sensitivity to rates is still there, and any stumble in capacity ramps, yields, or customer mix can dent the thesis. The practical takeaway: watch HBM share, backlog visibility, and pricing trends, not just headline revenue. Track CapEx plans and conversion rates because they signal how tight supply will remain. And remember that AI infrastructure winners today are the companies enabling bandwidth and power efficiency at scale. Want the deeper dive and full context? Read the full article at finlitica.com.